Hey everyone, it's been another crazy week in the stock market, and I hope your portfolio has been in the green for the week. Although the recent price action has been pretty volatile the past week, the AMC community is really coming together after this thinking of AMC as a reopening play, plus the increased short interest that's taking AMC stock to the moon. With all of this attention on AMC stock and upcoming major short squeeze, in this video, I'll explain the updates of AMC stock, the potential short squeeze and potential price action. But before we get into it and talk about the meteoric rise of AMC, I'd really appreciate it if you could smash the like button for the YouTube algorithm. For the low price of $0, you can help get this video pushed to other people looking to start investing, whether in AMC or another company, by turning the like button blue. So thank you for doing that. And with that said, let's get into the video. So as of after hours on Friday, June 18, AMC had a stock price of $59.26. Although it's been recently on the downtrend, if we look at the 5-day chart, we see that it's still up over 14%. Also, if we look at the 1-month chart, we see that AMC is still up over 360%. Now, I made separate videos discussing the AMC gamma squeeze and short squeeze in length. I linked those videos down below in the description if you're interested in checking them out. So I'll start by quickly catching you up to speed with the latest short interest metrics. There are 600,000 short shares, according to Fintel. The short borrow in fee rate is 1.18%. Also, the short volume ratio is 21.28. The number of fails to deliver shares is around 174,000 shares, and the ratio of institutional puts to calls is steady at 0.93. Because of this recent uptick in the short interest for AMC, we're still seeing Google trends for AMC now higher than GameStop. However, AMC's trend has been declining for the past few days, which means AMC may have hit peak media for the time being. Interestingly, AMC's peak a few days ago is still much lower than GameStop's peak back in January. This could mean that AMC still has more room to run upward, which could send its stock price higher. Interestingly, AMC is still also trending more than Dogecoin, Bitcoin, and Tesla on Google Trends. However, Bitcoin is only 4 points below AMC, meaning Bitcoin may soon overtake AMC in the trends. So the next chart shows the Wall Street bets sentiment for AMC versus comment volume over time. While there doesn't appear to be a clear correlation between these two metrics, we see overall sentiment for AMC has been steady and slightly trending upward the past couple of weeks as the stock has been holding at around $55 to $60. Also, this chart shows Wall Street Bet's stock mentions in the past 24 hours. As we can see here, GME overtook AMC as the most mentioned stock, and AMC is lagging behind GME in second place. Now, one great trend to be a part of that isn't listed here is to smash the like button for the YouTube algorithm. For every like button you turn blue, you're helping to increase the value of this video by having it be recommended to others. So thank you for doing that. With that said, let's get back into the video. Now, AMC stock has soared in recent weeks amid a broader resurgence for meme stocks. While the price action has more to do with technical factors, the movie theater chain is seeing a recovery as customers return. Foot traffic data from Placer.ai show AMC locations saw visits jump 79% week over week during the fourth week of May and at 159% week over week during the first week of June. Though AMC's foot traffic in May was still down 68% from May 2019, there was an improvement from a 70% decline in April and a 76.3% decline in March. Summer movie season will be a big test for AMC, though its movie may not have room to rise based on achievable sales figures. The company itself could use better than expected demand after about a year of pandemic related limitations. The team at Placer.ai note that the beginning of May 31st saw visits down only 50.4% from the comparable period in 2019. Over Memorial Day weekend this year, AMC saw foot traffic down 49% from in 2019. Now, its rival Regal Cinemas fared worse with a decline of 60.3% from Friday through Monday. That's worth noting given the bull case for AMC at least before it surged 368% in the past month, was based on the company beating competitors and amid consolidation trends. Now, while AMC is still an in-play meme stock and heavily supported on Wall Street bets, sellers appear to dig in as well. After a 2,500% increase in AMC's price, there is no evidence of a short squeeze. This may be a good time to sell AMC and walk away before this dangerous game of musical chairs stops. Now, AMC raised $230.5 million dollars at the beginning of the month by selling 8.5 million shares to hedge fund Mudrick Capital Management at an implied price of $27.12. Mudrick Capital quickly flipped its AMC stake to Wall Street bets and booked a 20% profit on the trade. The successful equity sale taught a very valuable lesson to AMC, however, because management found a way to monetize the Reddit driven trading frenzy by selling more equity at a ludicrous valuation. Sure enough, just a few days later, AMC announced another equity raise. This time, the movie theater chain sold $11.55 million worth of shares under its at the market equity program for total proceeds of $587.4 million. The implied price this time was $50.85. In total, AMC raised a massive $1.25 billion through equity sales in Q2 21. AMC now has 502 million shares outstanding and a total market value of $28 billion. About 100 million shares are sold short, which calculates to a short ratio of about 23%. Also worth noting, despite large scale buying of AMC in May, AMC's short interest at the end of the month went up 8.2%. Every time AMC's short interest ratio dropped in 2021, it immediately recovered. This shows that there's no evidence of a real short squeeze, which seems to be ignored on Reddit. What this means is that despite sitting on billions of mark to market losses, the short side of the AMC trade is not selling, a fact that is unfortunately underreported. AMC short interest has been rising since February, and the short interest ratio is now back to where it was at the beginning of the year, above 20%. Extreme overvaluations attract short sellers, they don't repel them. Clover Health and Clean Energy Fuels are two other examples of meme stocks that have attracted higher short volumes with rising valuations. Short sellers seem to be increasing their bearish bets on AMC again amid another surge in AMC's valuation this month. There is no evidence so far that hedge funds are closing their short positions on meme stocks, including AMC, and AMC's short interest ratio will likely see an increase in June too. AMC's valuation has only become more disconnected from reality this week, with estimated revenues of $4.8 billion next year and no profits in sight until at least fiscal year 2024. AMC now trades at a PS ratio of 6, which is absolutely extreme. Forcing a short squeeze has been the explicit target of Wall Street bets, but AMC's high short interest ratio shows that short sellers are digging in, not giving up. Now, one way to be bullish on this video is to hit the subscribe button and bell icon to get notified when my videos get uploaded. It's completely free to do so, and each subscribe and bell you click directly helps each video get watched more. So thank you for doing that. With that said, let's get back into the video. Now, non professional investors are continuing to upend financial markets and build on their forceful entrance into the arena last year. In the first half of 2021, new brokerage accounts opened by individual investors have already roughly matched the total created throughout 2020, hitting more than 10 million, according to estimates from JMP Securities. They have driven up the stock prices of companies ranging from GameStop to AMC. Both have gained more than 1,000 and 2,600% respectively this year. They have sent Dogecoin, originally created as a joke, soaring, and they have banded together on brash forums to inflict punishing losses on institutional investors. Here are 4 ways investors continue to shape every corner of the US market. Number one, their trading volume keeps growing. For years, individual investors' trading activity rarely made a splash on Wall Street. That started to change in 2019 when online brokerages moved in mass to commission-free trading. The the illness further accelerated individuals' interest in stocks last year, allowing those stuck at home to try their hands at trading through historic market volatility. Together, these forces helped drive individual investors' share of US equities trading volume to 20% last year, roughly double the figure from a decade before, according to data from Larry Tabb, head of market structure research at Bloomberg Intelligence. This year, that share has been growing. In January, when individuals piled into so called meme stocks, retail investors' activity was responsible for 26% of all shares traded in the US stock market, with some online brokerages accounting for sizable chunks of total trading volume on their own. Activity from individual investors trading on Robinhood accounted for roughly 4% of total US share volume in January, Mr. Tab estimates, while E-Trade financial activity constituted 2.4%. His figures exclude trading activity by electronic trading firms that execute individual investors' trades. Those figures have edged down since January, but Mr. Tab expects individual investors' elevated levels of activity to last. They definitely have influence and they're not going away, he said. We think for the next year or so, 18 to 22% of the market will be driven by retail. Long considered dumb money by Wall Street, the force of individual investors in recent months has captured the attention of everyone ranging from hedge fund managers to chief executives to regulators. One reason why is they have got real money behind their moves. On a net basis, individual investors have poured a net $140.57 billion into the US stock market this year, according to data through Monday from Vanda Research's VandaTrack. That is up roughly 33% from the same period a year ago, more than 6 times the amount during the same stretch in 2019. The second point is they tend to move in and out of trends quickly. There is no surprise that individual investors enter certain trades with force. Take, for example, GameStop in January. The stock surged as high as $483 on January 28, a roughly 643% jump in a span of 4 trading days from the stock's closing price on January 22nd. Thanks to the ubiquity of social media, individual investors tend to pile into trades together, either for individual stocks or broad sector themes, and strike quickly to drive the price up in a matter of hours or days. Almost just as quickly, data shows, individual investors pull out of these trades, moving on to the next. Take, for example, a basket of meme stocks that feature prominently on Reddit on Wall Street Bets. Data from VandaTrack shows that investors moved into the basket, which features companies like GameStop, AMC, and BlackBerry, quickly in January before largely abandoning the trade only 3 weeks later. Inflows into the basket have surged again in recent weeks, but already data shows the tide is turning. The price of the basket has fallen 17% over the past week. Vanda Research said in a note Wednesday morning, as flows into the stocks have also begun to slow. That is changing the way that one potentially trades these spaces. Gone are the days when you can buy and sell a small cap name and hope it yields 50% over time. It almost does that now in a matter of days, says Viraj Patel, global macro strategist for Vanda Research. Market timing is the best friend for the app trader in this space. The third point is individual investor activity is causing short sellers to back off their meme stock bets. The rapid rise of GameStop earlier this year put the spotlight on the practice of short selling, or when an investor bets against a company by borrowing shares and selling them in the hope that they can be bought back at a lower price. Individual investors targeted GameStop in January because of the elevated level of short selling activity against the stock. In what is now being cast as a modern day David and Goliath, individual investors are able to inflict steep losses on short sellers as GameStop's stock price catapulted higher, forcing the bearish investors to buy back shares to limit their losses. Some investors substantially trimmed their short positions. Among individual companies, short interest has fallen precipitously. GameStop's short interest currently hovers around 21%, compared to with more than 100% last year and at the start of the January meme stock trading frenzy, according to Dow Jones market data. Several other meme stocks popular on social media have seen short interest decline substantially. Fourth point is more trading is happening off exchanges. The rise in activity among individual investors has corresponded with more trading happening off public stock exchanges, otherwise known as dark trading. When an individual individual investor places a trade on an online brokerage platform, that trade is typically routed to electronic trading firms such as Citadel and Virtue Financial. The, those firms then usually execute the orders privately rather than, for example, on the New York Stock Exchange. Online brokerages and electronic trading firms often say the practice benefits non professional investors by executing their trades at slightly better prices than they would get elsewhere. Yet the practice has drawn increasing scrutiny this year, in part because of the lack of transparency around surrounding the trades. In January, the amount of trading volume in the US stock market happening off exchanges climbed to a record 47%, data from Rosenblatt Security shows. And among individual stocks, the figure can be even higher. In a recent note, Rosenblatt said that nearly 80% of trading of Sundial happened off exchanges in May. For AMC, that figure was 57%. There were many days in December and January in which off exchange trading was greater than 50% of total volume, said Justin Schnack, partner at Rosenblatt. Now, in the meantime, as we go to the moon, you can get started with investing in AMC by getting two free stocks valued up to $1,850 or the current offering when you use my Webull link down below and deposit $100 in your Webull account. Also, if you're interested in buying Bitcoin and earning interest on your crypto, sign up using my BlockFi link down below and you'll get up to $250 as a crypto bonus depending on how much money you initially deposit into your account. So I hope you got a lot of value and learned about the latest from AMC. If you found this video helpful, be sure to hit the like button, subscribe for more investing and personal finance content, and hit the bell to get notified when my videos get uploaded. Also, comment down below anything else you want to see and learn, and follow me on my socials to get even more investing and personal finance content. With that said, thanks for watching. Take care.